Good morning from our global headquarters in New York. I'm Manus Cranny. It is Bloomberg Brief. Let's set your agenda. Tensions escalate amid mounting global condemnation after an Israeli airstrike kills an estimated 45 Palestinians. T+1 returns. Stock trades in New York are now settling in a single day, halving your transaction time. And Apple rallies boosted by a 52% increase in iPhone shipments to China. A very good morning. A shot in the arm for the iPhone. Again, emboldening the overall trajectory of risk this morning. Keep an eye on that. We saw shipments jump by 52% and Apple rallies by nearly 2.25%. But where are we with volatility? I mean, we're looking at equity market volatility hitting a 5-year low late last week. Laurie Calvasina over at RBS says we're stuck in neutral for now. Investment sentiment is still testing the highs of 2023, but the markets are fairly valued. To the bond market, we're still on course for a loss this month. You're looking at yields just dropping by 1 basis point. Again, we're counting down to the PCE this week on Friday, and that's expected to be the lowest readout of 2024. There'll be less quantitative tightening next month, by the way, and bond market volatility is the lowest since 2022. The dollar is down technically for the third day in a row. I'll take my win wherever it comes. UMich inflation expectations dipped on Friday. The shorts are mounting up for the first time. The asset managers are net short on the dollar in 6 weeks. Do you need to prepare for perhaps a more cyclical downturn in the dollar? So Apple is up. Nvidia is also a bit up this morning as well. Again, reflecting in that results glory from last week, and it carries through as we come back from an extended weekend here in the United States and in the UK as well on the bank holiday weekend, up 2.84% and counting with Nvidia. So as I say, we are counting down to the PCE. That will hit the tape on Friday. Volatility is getting crushed across markets, specifically in equities. The VIX index hitting the lowest level in 5 years late last week. Stocks are not alone. Oil, bond, credit and FX volatility are all grinding lower. My guest this morning is Peter Garnry from equity side of Saxo Bank. Peter, good to have you with us this morning. When you look at that kind of repressed volatility, and yet every couple of days we sort of seem transfixed either by an inflation print or indeed a little bit of Fed speak. Well, with volatility in such a low regime, what does that say to you? Is it worth spending money buying protection, or what is it that causes this repression? Good morning.
Good morning. Yeah, it feels very much like a summer breeze. The macroeconomic backdrop is still pretty robust. We are rebounding in Europe. Things seem pretty fairly quiet. The equity outlook from companies in the Q1 earnings season was quite solid as well. So I think everyone is just, the market is just calm. We have this low volatility. And then, as you say, I mean, there are opportunities to potentially be long volatility. We have this U.S. election, which will be the most important one in probably decades, which we'll get in November. So the way we look at the market is that we probably will grind higher in equities. We'll probably be in a fairly low volatility regime until we get on the other side of the U.S. election. And then a lot of things will happen because, well, there's a whole fiscal situation that will have to be debated in the U.S. Whereas the economy, as we grind along, how will the economy respond to these high interest rates over time? Right now, it seems like the economy is like a two-lane economy. You have pockets, the healthcare sector with the obesity drugs, the AI investment boom, electrification is really driving a lot of investment booms. But then you also have a part of the economy that is struggling with the high interest rates. And that's the conundrum that all the central banks are facing right now.
Look, I think it is definitely, it's hard for people to get a solid read on where we're going. I'm curious to understand why you think we are still in a form of a bubble. I was looking at Laurie Calvasino's note that came into my inbox this morning. She says, we're in this stuck in neutral for now, but investor sentiment is testing the highs that we haven't seen since 2023. What is it that defines bubble for you? I mean, are we going to have a small correction, or is it going to be something more ominous and perhaps a 20% drawdown? What scale of bubble are we in?
I think what's happening right now, it's a feedback loop. So lower volatility, unless there is a hiccup, tends to breed more lower volatility. When we talk about a bubble, it's simply from the fact that if you look at the equity valuations in the US, it's very clear that the AI theme has pushed US equity markets to equity valuation we saw last time in 2021. And then it's back in 2000. So we just cautious in our latest quarterly outlook we shifted to a more negative stance on U.S. Equities, at least tactically. So we prefer European equities. So I think bubble is always difficult to predict. We just call it bubbly territory. I wouldn't be surprised if there is a setback on this whole AI theme, that we could have a meaningful setback in U.S. equities without that being a catastrophic event. 10% would be something that I would not be feeling that was unusual if it happened.
Yeah, I mean, look, there's no doubt about it. We are like the bulls running at Pamplona, and one of those is NVIDIA, Peter. But I want to go beyond that. I mean, NVIDIA is bid up this morning. You've got Apple charging ahead this morning again on better news from China. NVIDIA is up by 2.73%, again, reflecting in that glory from last week, margins at over 70%. But you have a broader context of where you do want to be within this space, and it's about electricity generation. So let's just talk about that within the AI framework. We can come back to the AI stocks in just a moment, but I am curiously drawn to your thesis on electricity generation. It's not the first time that I've heard it, and indeed, Europe is further behind in terms of AI generation than we are in the United States of America. So I think it's a double boost. Talk me through the theory.
Yeah, I think what's playing out is a little bit what we saw with electric vehicles. It's very difficult to potentially predict the winners in electric vehicles. So we have always said we like the grid, the infrastructure, the ecosystem around production of electric vehicles. That's probably more niche. It's the same with AI. The AI trend has already run tremendously with NVIDIA charging ahead. But if you go below in the ecosystem, it's actually the grid infrastructure that is potentially the physical constraint in the system, and where there could be some attractive profits and opportunities. So you look at these grid technology companies, ABB, you have Siemens Energy, you have GE Vernova in the US, Nexans from France. These companies are quite interestingly positioned, because just going back 1 year from now, a lot of the utilities very close to data center clusters in the US were predicting almost zero electricity demand growth over the next 10 years. Forward 1 year, they're almost now predicting a doubling of electricity demand over the next 10 years. So it's a dramatic change of business, and utilities is just a very capital intensive. It's a very difficult business to earn a very high return on invested capital on. But the grid infrastructure, that is really where it's key, because you have fewer players, and you can have a higher margin business there. So that's why we think if you didn't get on the bandwagon on the actual AI companies like NVIDIA, I think the whole electrification will be super interesting, because it's also charged not only by AI, it's electric vehicle, it's heat pumps, and everything. If you want to lower the carbon footprint of the economy, it is to electrify the economy. So that's where investors should look at.
And in terms of the risk, we're trying to frame, we're coming back from a long weekend, both in the United Kingdom, here in the United States, post-Memorial Day. The red headline is about Apple. Apple shipments up 52% across China. But it's a wonderful headline, and the stock is undoubtedly responding, up 2.125% now. But if you look at some of the reaction function in China, it's about cutting prices on EVs, cutting prices on Teslas, cutting prices on Apple. I mean, it may be something to cheer, but we're hardly in a euphoric state when it comes to selling merch in China.
Well, I think our view on China is within the geopolitical fragmentation that we're seeing going through the world today. There is a nationalistic approach and sentiment in China, Chinese products first. We have seen that over the years, and I think long term it will be a very difficult marketplace to operate in for US technology companies, also Tesla, etc. So I don't put a high weight. I think Apple's majority of their profits and cash flows in the future will come from non-Chinese markets. So it's actually not a news item that I would put a lot of weight on. I think the Chinese story is super difficult. It's also difficult from an asset allocation perspective. We have had very little returns coming out of the Chinese equity market over 10 years. Mm-hmm. And for companies operating there, it's very difficult. So I'm not super excited around that headline.
Okay, and if we get a change in regime or not, as the case may be in the White House, certainly it looks as if we're going to move into this new era of understanding what the new playing field is on an ongoing basis with regards to tariffs. Peter, thank you so much for setting the agenda this Tuesday morning with us, Peter Garnry of Saxo Bank. Other headlines trending on your Bloomberg terminal this Tuesday morning. Bitcoin's falling. Traders monitor the transfers by wallets belonging to Mt. Gox. Administrators for the failed crypto exchange have been stepping up their efforts to return a hoard of Bitcoin to creditors. One key question is whether those who receive the tokens will sell. UBS has signaled that most of the bank's job cuts in Asia are over as it nears a historic merger with Credit Suisse. The bank's head of Asia Pacific spoke exclusively with Bloomberg.
We've optimized most of the position, both in terms of lines of business and the geography as well. Okay. So you have to take into consideration cyclical trends, lines of business, as well as the geography. I think for all of that, we are in 13 locations in Asia Pacific. For most of that, we are done.
Over the Memorial Day holiday weekend, a series of powerful storms swept over central and southern U.S. The storms killed at least 23 people and left a wide trail of destroyed homes, businesses and power outages. Coming up, we'll bring you the latest on the Middle East tensions after an Israeli airstrike killed dozens in Rafah at the encampment. And we'll discuss the Trump victory, what it might mean for the dollar with Elsa Lignos of RBC Capital Markets. Context matters on Bloomberg. Hey, it's Bloomberg Brief. I'm Mackenzie in New York. Well, the tensions are mounting in Gaza. This after an Egyptian soldier was killed in a clash with Israeli forces. That follows Israel's deadly airstrike on the refugee camp in Rafah, drawing outrage from around the world. And according to a report from Axios, the White House is assessing the attack as to whether it violated one of President Biden's red lines in the U.S.'s support for Israel. For more, let's get to our very own Bloomberg Horizons anchor, Joumanna Bercetche. She joins me now from Dubai. Joumanna, the significance of this move from the White House and the rest of the international, the reaction that we've seen so far to the events in Rafah over the weekend. President Macron talks of outrage. How would you contextualize the global response?
Well, the first thing to note here, Manas, is that this was the deadliest attack on Rafah since Israel began their ground invasion at the beginning of May. 45 Palestinians are believed to have been killed, a lot of them women and children, though, of course, Israeli officials say that they did also kill 2 senior Hamas officials. That being said, the international condemnation came very quickly yesterday. Arab states were first out of the gate. Qatar, a very important country in terms of those mediation efforts between Israel and Hamas, putting out a statement saying the bombing will complicate the ongoing mediation efforts. Saudi Arabia also condemning the action in very strong terms, saying, and this is a quote, "The continued massacres committed by Israeli occupation forces are condemned." And then later on, we started to get commentary out of Europe. You mentioned President Macron there. He tweeted that he is outraged by the Israeli strikes that have killed many displaced persons in Rafah, saying these operations must stop. There are no safe areas in Rafah for Palestinian civilians. And then later on, we did hear from the U.S. White House saying that they saw the images coming out from Rafah and deemed them to be heartbreaking. Later on, the Israeli Prime Minister Netanyahu did say that the strike in Rafah was a tragic mistake. It was not meant to cause civilian casualties, and they're looking into the incident. And I think this bit is critical here, Manas, because you talk about this Axios report around the red line. Well, if the U.S. constitute that this red line was broken, then it could entail a seize of shipments of military equipment that is essential to Israel's war efforts at this point.
And this goes back to what Biden actually said. I made it clear, if they go into Rafah, I'm not supplying weapons that have been used historically to deal with Rafah, to deal with the cities that deal with the problem. Look, you mentioned Qatar there, and obviously they are a fulcrum in this negotiation between all parties to try and reach some kind of a truce, some kind of an end to this. This event and this, as you say, Netanyahu is saying it was a tragic error, but how much of an impact, how much of a negative impact is this potentially going to have on truce talks?
Well, you may recall a couple of weeks ago, Bloomberg's Francine Lacroix spoke to the Qatari Prime Minister, and he said back then, remember, this coincided with the beginning of that ground offensive in Rafah, that because Israel were now entering into Rafah, this would mean that any furthering of those talks was now put on hold. He said that there was a pause of the talks taking place and they would not be able to continue as long as that Rafah offensive continues. The other element to consider, Manis, is overnight there was also a flaring up, you could say, of hostilities on the Egyptian border as well. One Egyptian border guard was killed in an exchange of fire with Israel, very rare for Egypt, and note that they also signed a peace agreement back in 1979. And both those countries, Egypt and Qatar, are key to pushing forward these truce deal discussions. And for the time being, it appears that there is a reluctance on their part to continue pushing those efforts so long as Israel is on the ground in Rafah.
Okay. Joumanna, thank you so much for joining us this morning. Our Bloomberg Horizons anchor, Joumanna Bercetche in Dubai. Coming up in the show, a look at what else is making headlines around the world. This Tuesday morning, as we return from Memorial Day weekend, tech is on fire, bid up by Apple and Nvidia. Context matters on Bloomberg. Good morning. Bloomberg Brief, I'm Mackenzie in New York. Let's take a look at the front pages for you. What is making news around the world? First up, we've got the Financial Times. Western companies are backtracking on their Russian exit plans. Avon, Air Liquide and Reckitt are among the companies that have stayed in Russia since the invasion of Ukraine in 2022. Next up, we've got Bloomberg. We're counting down to the New York jury returning on Donald Trump's hush money trial. It's set to hear closing arguments a little bit later today. Prosecutors, defense lawyers will be squaring off against one another after nearly 5 weeks of evidence and testimony. And the jurors could reach a verdict in a matter of days. And then, of course, we've got our headline of the day. Apple's China iPhone shipments rising 52% in April. That's a pretty rapid rebound coming after it registered growth in March following steep declines. Remember that at the start of the year. Let's get to Tom Mackenzie wrapping up this story for us. So it's a turnaround moment, but it hasn't come without cost, has it, to Apple? Tom, good morning.
There has absolutely been a cost, and that's been in terms of the price cutting madness that's been coming through for these iPhone 15s in the Chinese market. On some counts and on some retailers like JD.com, price cuts of up to 20% because they've been desperate to shore up that market share that fell from about 20% for Apple and their iPhones in the Chinese market to about 16%. Yes, the first 2 months of the year, they saw double-digit declines in terms of shipments. March was essentially flat, and now, according to official data, a pretty significant rebound for Apple. 52% increase in shipments. But as you absolutely rightly say, that has come at a cost, and it's going to lay a question mark over the margin story, I think, for Apple in that market, and whether or not they can sustain this going forward.
Yeah, I mean, 194 at the moment. Just looking here at Dan Ives from Wedbush, he's got a target on that of 270. I mean, he's like an evangelist himself. The godfather of AI might be Jensen Huang, but the godfather of Apple calls is him. He's got the iPhone demand turning a corner on the AI-driven story for iPhone 16 super cycle. I'm at 15. Would you pay up for an iPhone? Would you pay up for AI? This is the question. That is fundamentally the question. Whether you and I, normal people, would pay for AI. Can they monetize it that way?
Well, you don't go for the first model that they push out, do you? You want to wait for the second model.
First mover advantage.
Why are people buying the Apple Watch when it first comes out? You want to wait to second model, third model, when they've kind of itinerated all this stuff. But you're absolutely right. Look, they're coming through. They're going to have a big announcement around how they're implementing AI across their hardware devices in June. So we're watching that for Apple. On the story of AI as well, it's fascinating to see the fund flows continue. So this time, Elon Musk raising $6 billion for XAI. $6 billion, less than a year after he founded that AI business. He says pre-money valuation of $18 billion, the money coming for Sequoia, Andreessen Horowitz, obviously very big names in the VC world. And he's going to put that money to use around infrastructure, he says, again, around getting some of the products they've already developed, like the chat product they've got, the chatbot Grok. They want to push that out to more users and build out more innovations. That's how he says he's going to put that money to use. Really interesting as well. Of course, Musk was a key backer of OpenAI. He's fallen out with Sam Altman since. Grok is a competitor now to ChatGPT. So we'll see how serious this becomes in terms of this AI space. But as a reminder, just how much money continues to flow in. Pre-money market valuation of, what, 18 billion being flagged by Musk, raising $6 billion in less than a year.
Yep, it just shows you, I mean, the competition is heating up in both in terms of the chips, who can actually catch up with NVIDIA and in what space of time, and then who is going to be a serious challenger for ChatGPT ChatGPT. I mean, he's got staff in there from what? DeepMind, Microsoft, and Tesla. Tom, good to see you this morning. And you're right, I'll hold back on waiting to get the next iPhone 16. I'll just sort of stick with my 15. And you can review the AI features for me. Tom Mackenzie in London on the Apple and tech stories as Elon Musk raises money for his challenge to ChatGPT. Coming up on the show, we're going to talk about what a Trump victory would mean for the dollar with Elsa Lignos of RBC Capital Markets. This as there's more manoeuvring and rhetoric from the Bank of Japan over the weekend. The market counts down to some of the hottest inflation prints in 30 years in Japan. What does it mean for yen? On Bloomberg. From our global headquarters in New York, a very good morning. I'm Manus Cranny. Let's set your agenda. Tensions escalate amid mounting global condemnation after an Israeli airstrike kills an estimated 45 Palestinians. T+1 returns. Stock trades in New York are now settling in a single day, halving the transaction time. And Apple rallies, boosted by a 52% increase in iPhone shipments to China. A very good morning. Well, there's no doubt about it. NVIDIA, along with Apple, are responsible for the little bit of a bid that you have going on. We'll catch up with our guests in just a moment. Stocks are up by 0.25%. Volatility is at the lowest, just off its lows from 2017. You've got Apple bid up this morning. Their shipments in China up by 52%. Now, that's after some heavy-duty price cutting that you've had. You've also got NVIDIA bid up this morning, again, carrying through from its reflected glory of its results last week. We've just had Saxo with us this morning. A little bit mistrusting of this equity market. You may well, indeed, they are calling it a form of bubble. Valuations, maybe a little bit stretched. Laurie Calvasina at RBS says we're stuck in neutral at the moment. This market is counting down to the PCE. I mean, bonds, by the way, are on course for, again, a loss in this month of May, down 1.4%. We're looking for the lowest print on the PCE so far in 2024. A couple of other things to consider for the bond market going into the month of June. Less quantitative tightening and volatility is the lowest since February 2022. There's NVIDIA at the bottom of the screen, up 2.5%. Now, the dollar is down for the third day in a row. I mean, those University of Michigan inflation expectations dipped. That managed to invigorate a little bit of dollar selling. The shorts, the asset managers are shorting the dollar. They're mounting up for the first time in 6 weeks. Do you need to prepare for a new cyclical downturn in the dollar? Many have called the demise of the dollar and been on the wrong side of that trade. We're focused on Japan. The Bank of Japan has signaled that there is room for rate hikes as the nation shifts away from what they call the inflation norm of 0%. Let's take a listen to the Governor Ueda speaking yesterday.
We have made progress in moving away from zero and lifting inflation expectations. But we must now re-anchor them at the 2% inflation target. We will proceed cautiously as to other central banks with our inflation targeting frameworks.
Cautious for a whole host of different reasons at the Bank of Japan relative to the Fed. My guest this morning is RBC's Elsa Lignos, and this is what she has to say. There is no doubt that the yen is extremely cheap at the current levels. Events in the past month have only reinforced the expectation that it can stay weak and weaken further from here. That is not what they're going to be shouting cheers of joy at the screen this morning, Elsa, if they're tuning in at the Bank of Japan, are they? I mean, and if you look at services inflation this morning, it's the fastest spike in 30 years. So we are certainly moving away from that zero-bound level of inflation expectations. Talk me through how they will look at this services data this morning, the fastest pace in 30 years. Do you think it's going to embolden the move to hike earlier and faster? Good morning.
Good morning. So I think the key thing is that when you look at it in the context of the last 30 years, that's a period where Japan has had almost consistent disinflation. And so, yes, you know, it's the fastest pace in 30 years. But the key thing is, how far and how fast can the Bank of Japan hike? More importantly, how far and how fast can the Fed cut? And at the moment, if you think about where the yield differential is coming from, it's coming from the rest of the world rather than what's going on in Japan. I think even the most optimistic of Japan bulls out there don't think that the Bank of Japan could be hiking rates to anywhere near rest of G10 levels.
Look, there's no doubt about it. The carry trade, even on its very, very superficial bulkhead level of 5% in the US, 1% in Japan. What are the biggest carry trades out there at the moment? Is it dollar yen? Is that still the most resplendent and strongest of position? And it will not be unseated, Elsa, unless the Fed cuts more aggressively and more quickly than we all think.
Dollar yen is definitely one pair. Dollar Swiss is another very popular pair. Looks likely that the S&B, they've already cut once in March, may well cut again at the June meeting. Beyond that, though, there's still a fair bit of interest in the higher yielding emerging markets. MEX has been popular for a lot of the year, clearly had a slightly trickier time more recently, but the carry is still very attractive. Brazil, another interesting one to watch. Inflation there picking up, and the Central Bank of Brazil potentially going to be turning more hawkish in response. So there are a number of central banks out there that are delivering very high nominal yields and pretty strong real yields as well.
How would you describe the positioning in yen at the moment?
Oh, it's short. There's no doubt about it. If you look at dollar yen positioning on our metrics, we're sitting anywhere between 90 to 95% of the max largest ever long position in dollar yen. But that said, a lot of people took profit a little bit too soon, were waiting for an intervention-led dip to buy in again, and never really got that opportunity. Intervention, when it did come, didn't really cause the material pullback that some had expected. I do think that there are many out there who'd rather play long dollar Swiss than dollar yen, because you may be giving away a little bit of yield. The Swiss central bank has higher rates, but at the same time, you have a central bank that appears to be working with you rather than against you.
I got it. And let's just square off on that. If you were to look at yen, you say it's cheap, it can get cheaper. So if intervention had a limited effect, do you see a mildly limiting effect from actual rate hikes? I mean, what is it that stops the yen from depreciating if neither of those salvos are going to come to its savior?
Well, if we're talking about hikes at the pace that's priced in by the forward curve, or even something slightly faster than that, then yeah, absolutely not enough to turn things around. And that is why I keep coming back to the fact that it has to come from the Fed side. If we were to go into a US recession or material US slowdown, the Fed is forced to cut rates more aggressively, that would be where yen relief comes from, rather than the Japanese side.
Let's just pivot to the ECB, because again, I'm drawn to how you describe Europe. You say the bounce in the euro activity has already begun to show signs of waning. So where is that most potent? And then again, does that build on the narrative of an outpacing of the ECB relative to the Fed? But the euro has held up reasonably well of late.
Yeah, absolutely. And for me, euro dollar is very much a range trade. I think last time I was on Bloomberg, I was asked by your colleagues in the US, how come you're a dollar bear? And I'm not a dollar bear, I'm not a euro bull. It's just I have a forecast for year end that is not far from levels where we are at the moment. In fact, we've since bounced, so my forecast is slightly lower than where we are now. But it's very much a range trade. 106 to the downside, 110 to the top side, kind of marks the range pretty well. And I think when you get up nearer the top end of that range, you will see interest to sell euro dollar from people who think we're in this low vol positive carry environment.
I suppose the question comes down in terms of the bullishness in the dollar trade. We've just seen a little bit of a quake in the past couple of days. The inflation expectations were a little bit lighter on Friday from you, Mitch. We're counting down to the PCE later this week. Do you think we're at the beginning of a potential turning point in the dollar?
We could be, but honestly speaking, it's too soon to tell, because we need data to show cracks in the US economy. And that's not what we're seeing at the moment. At the moment, we're seeing the strength moderating, which I think should be expected, but not seeing deep cracks of the sort that would force the Fed into cutting rates a lot faster. If anything, over the last few weeks, we've actually seen, or the last few months, we've actually seen that uptick in inflation that's made the Fed's job more complicated. Now, we still have CPI to come in a couple of weeks, PC obviously coming up ahead, but we've had a lot of the clues, the stuff that feeds into that from the CPI and PPI prints already this month. So you need to see signs that things in the US are slowing down far more materially if you want to position for a turn in the US dollar. Until that happens, you mentioned it in your intro, a lot of people have been caught out, not just this year, but for the last 5, 6, 7 years, positioning for dollar weakness, and every time it's been premature.
And as we get closer to those elections, I mean, we've got a reading, hopefully, over the next couple of days of Trump's legal position here in New York. I don't think that's necessarily going to move the dollar, but we are incrementally moving closer to that election. Do you think it's too soon because to begin to hedge the dollar going into potential electoral change here in the US?
I think part of the reason people struggle with that trade is that there's still a divergence of opinion as to what a Trump victory would mean for the dollar. I mean, clearly there are some that argue that he would be very dollar positive, tariffs, America first, all the rest of it. And then we had the story a couple of months ago from his advisors suggesting he would favor a weak dollar policy. He would push the Fed to be more dovish. And I think there's a real dichotomy of opinion when you talk to clients and investors about what a Trump victory would mean for the dollar. And so that means, in turn, how do you position for it ahead of time? I think the only thing people expect at the moment is some uptick in volatility. And you can see that in the forward curve, for euro-dollar vol in particular, a real discount for the front end versus the back end, and that makes sense.
Well, certainly the FT went with Bill Gross, his line over the weekend. Trump is more bearish of the candidates simply because of his programs to advocate tax cuts and more expensive things. It's not exactly what you call PhD level macroeconomic thesis, but it is one view from Bill Gross. Elsa, thank you so much for being with us. Let's see what the Bank of Japan do. Certainly we will return to this discussion over time. RBC Capital Markets, my guest this morning. Coming up, US stock market finally as fast as it was about 100 years ago. Wall Street returns to T+1 stock trading. We'll break down what does it mean for you in reality. Context matters on Bloomberg. It's Bloomberg Brief. I'm Manus Cranny in New York. Wall Street is switching gears to a system called T+1 today. What does it mean? Stock trades will now settle in one day. That is for the first time in 100 years. For more, let's get a little bit more detail. Kriti Gupta joins me. What is the point of moving equities to T+1? Let's just hope that the cash transfers can run in the same kind of speedy time. Kriti.
Well, Manus, in theory, it's supposed to make the markets a little bit more efficient. It's supposed to bring international investors and domestic investors into the United States basically on the same page. And this is really a century in the making. Some would argue this started in 2021. But, Manus, back in the roaring 20s, this is really where it began, where your bigger players in the stock market were kind of overrun by, at the time, what were considered bucket traders, your retail investors of the day. Fast forward essentially later, it is still that meme stock frenzy that has created so many fears in the international market, that the volatility within the states is really not being able to be kept up with internationally because of the excess step of settling trades, the FX component that comes into it. This move is hopefully going to address all of that.
Look, we've moved incrementally forward, haven't we? It takes a crisis to move you forward from 5-day settlement to 3-day settlement. I mean, I'm talking about post-GFC. But if we're to talk about the challenges, I mean, we've had many, many technological advances in blockchain and the back-end systems for this. But what do you think the biggest challenges are in the transition for the firms that have got to deliver this settlement process?
Well, I think it's at the heart of the question of why not make it T+0? Why not make it immediate? And one of the big questions here to answer that question is failed trades. And that's really why T+2 was put up in the first place from T+5, which is simply this idea that there needs to be a cushion for some of those failed trades. If a buyer can't actually put up the money that the seller is expecting, if there are operational glitches, if there's a staffing issue, that's why you need those 24 hours for the settlement to come forward. And those are the very issues that a lot of people are concerned about hitting the market in the next 24 hours. The operational glitches, the additional cash. There are banks like Jefferies, for example, that have been building a cushion just to really offset some of this. Citigroup, for example, moving some of their staff to Kuala Lumpur, working Tuesday to Saturday just to deal with some of the liquidity issues that are expected in these early days as they're dealing with some of those teething pains.
Okay, well, let's see how it all goes. Kriti, thank you so much. Kriti Gupta there, counting you down to your T+1, your settlement. And if you trade in Apple or Nvidia, you'll be able to settle that trade in 24 hours. The state of play, SPOs are up a third of 1%. Again, volatility is at the lowest level that we've seen since 2017 on the equity market. Small bounce yesterday. Laurie Calvasina says we're stuck in neutral for now. Again, we've just had a conversation with Saxo, Peter Garnry over there, talking about the potential for a little bit of a stretched valuation on these equity markets. The dollar is down. And again, it's a question of something pretty monumental to get the Fed to cut more aggressively and more quickly. That's according to our FX guest. This morning, you're looking at the dollar down for the third day in a row. The shorts are mounting up in the dollar market at the moment. And yields, 445 is where we are on 10-year paper. Again, you're on course for a loss of 1.4% so far in the month of May. We're counting down to a PCE, which will be the lowest so far this year. Coming up in the show, it's a short week. You got over your Monday blues. You were off. And we have a slew of Fed speak for you and earnings on deck. Context matters on Bloomberg. This is Bloomberg Brief. I'm Manus Cranny in New York. Let's check out what's on the slate for the rest of the week. We have the closing arguments for the Trump hush money trial. That begins at 9:30 a.m. Eastern. Retail sales for Kohl's and Nordstrom on Thursday. And then all eyes down for a slew of economic data. We got GDP, initial jobless claims, personal income and spending, and a drum roll for the PCE. The bond traders can sleep easy between now and then. So after a week-long hiatus, Donald Trump's hush money trial is returning to court for the closing arguments today. Pangea Policy's Terry Haynes writes this. Today, Trump's prosecutions are moving close to irrelevance, but not completely. A potential New York conviction this week is a small negative for Trump's chances, but it is neither a seismic negative event for Trump's candidacy nor a boost for Biden. So we've had 5 weeks of arguments. David Gura has been tracking these throughout, and he will spend the next 3 days outside the court until there is a verdict. David, good to see you this morning.
Good to see you as well.
Welcome back. So what do we expect? I mean, closing arguments, the purpose of this is what? To galvanize the jury, to jolt their memory. So it could be, what, a day of closing arguments? Just set the theater for us this week.
Likely to be a day. It could be longer. But yeah, the point here is to recapitulate what's happened over these last few weeks. And the burden, of course, is on the prosecution to prove that Donald Trump falsified business records in advance of another crime. And we can talk about the nuance of that in just a minute. But the prosecution brought forth 20 witnesses. That's a lot for the jury to have to listen to and sift through, along with the documentary evidence. So the burden is upon them to, again, tell the story to the jury, make them think that what Donald Trump committed was a crime. The burden on the defense is lighter, but no less important. Their job is to say that Donald Trump wasn't involved in the scheme that's been outlined by the prosecution.
Now, that jury's got to return a united verdict on one part, but not on the... They don't need to decide the crime. They just need a unified verdict in the first instance, don't they?
It has to be unanimous, and that's something on which I think the defense is counting, that there could be a hung jury. There could be one member of that jury who could say, look, I'm not convinced beyond a shadow of a doubt that Donald Trump did this. And I think that that is something that, if it were to happen, would be seen as kind of a victory for Donald Trump and certainly for his campaign as well, perhaps as much as a not guilty verdict. I think, in light of what Terry Haynes said at the top, what you read from, the campaign is going to use this effectively to their advantage either way. We've seen these grievance politics on display now for many years. If the president is found not guilty, that's certainly a vindication for what he said for a long time here, which is it's a sham prosecution. If it is guilty, there's a lot of uncertainty about what that'll mean in terms of what the sentencing might look like and how long it would take to play out.
It was almost like a daily media roll call of various people turning up at the courthouse. It was very much used by Trump as a form of communication. This is not the only criminal prosecution that he faces. It's one of 4. So in terms of the scale of potential penalty that could be brought to bear, what is the range of penalties that could be leveled at former President Trump?
Well, it's real. For each of these 34 charges, he could face 4 years in prison. And the way this usually works is those sentences are served concurrently. So that would be the maximum, say 4 years in prison. We say extraordinary or unprecedented so many times in the context of this former president, but it would be that, were he to go to prison for these crimes. But you're right to bring up the fact that this is happening in a crucible where he is facing these other trials. I think what's extraordinary about this is if you were to rank them or think about the seriousness of them, a few months back, you might think that this was at the bottom of the list. This is a very nuanced thing relating to campaign finance. There are other live trials that are dealing with issues related to January 6th or stashing classified documents. All of those have been effectively gummed up and stalled. So this is the trial that's happening before the election. So by virtue of that, takes on greater importance. This is the only time that we're going to see Donald Trump in all likelihood in a courtroom ahead of the November election date.
And that's pretty important when it comes to the campaign and the issues around that. David, good to see you.
Good to see you as well.
Well done getting here. Getting that story on the TV for you. And David Gura is, of course, the host of The Big Take. More from David throughout the week. What's going to cook for the markets this week? Well, it's about the economic data. Let's get to our cross-asset strategist, Ven Ram. Ven Ram, I'm truncating everything, going straight to PCE. But, of course, jobless claims on Thursday. There's GDP, flash readings as well. Contextualise for me this morning what you think is going to set the tone.
I think what's going to set the tone is definitely the core PCE. I mean, the markets are expecting 2.8% number. Now, to put that in context, the Fed thought at the end of last year that number was going to be somewhere around 2.4% this year. Come March, they revised it up to 2.6%. So 2.8 is even higher than that, obviously, and is not going to send a message of convincing disinflationary walk to the Fed. And therefore, they will be wary of indicating even more rate cuts. So the GDP data, to the extent that the economy has been resilient, to the extent that the labor market has been resilient, I don't think there is going to be much of a price action centered around it, unless, of course, we get a shock reading, which would be inconsistent with all the other data that we have seen. So it's very much going to be the inflation data that's going to guide the markets for the next couple of weeks ahead of the Fed's new dot plot.
And again, the bond market on course. I just wonder if we get into June, is it going to be the turning point for the year of the bond? I mean, again, another month of losses for the bond market, 1.4%. But again, many people are sort of saying in the bond market, it's come in, clip the coupon and move on. But of course, there's going to be less quantitative tightening next month as well.
Yeah, clip the coupon and move on was a trade that's supposed to have worked from the middle of last year, as far as I know. And that hasn't worked out very well, albeit, recent gains may be auguring well. But the big picture is still one of when is the Fed going to conquer the last mile of disinflation?
Yep.
Are we in a regime where 3% inflation is the new norm, not 2%? And if 3% inflation is going to be the new norm, and you combine it with real GDP growth of 2%, what do you get? You get a Treasury 10-year yield north of 4.5%. That's where we are.
And that, some would say, is worth having. We haven't had that for a while. Ven, thank you so much. Ven Ram, setting the agenda for markets. Bloomberg Surveillance, the team are up next door to us. They'll take you through the next couple of hours. Context Matters on Bloomberg. Good morning from New York.